Hello friends! Trading on financial markets is always associated with risks. No matter what market you trade in, Forex, cryptocurrencies, stocks or bonds, there is always the possibility of losses. That's why our team's mission is to build a culture of thinking for informed trading in the financial markets. It's Strifor with you. And in today's video, we're going to look at the main types of risks traders and investors face in different financial markets. And before you start watching, we recommend subscribing to our channel and turning on notifications so you don't miss other useful videos. The Forex market is one of the largest and most liquid markets in the world. However, this does not mean that it is risk-free. Currency pairs can show significant fluctuations in response to economic data, political events, and even natural disasters. This makes the Forex market prone to high levels of volatility. For example, the earthquake in Japan in March 2011 caused the Japanese yen to strengthen sharply. This was due to repatriation of capital by Japanese companies to recover from the disaster, which increased demand for the yen. Although the Japanese government and the central bank tried to stabilize the exchange rate, the appreciation of the yen created significant difficulties for Japanese exporters. Forex is also characterized by geopolitical risks. Since currencies reflect the economic state of countries, any political instability or conflict can dramatically affect exchange rates, adding uncertainty to the market. It is also worth noting the influence of central banks, which can intervene in currency markets to stabilize their national currencies, which can lead to sudden and unexpected changes in exchange rates. Cryptocurrency markets, despite their popularity, remain some of the riskiest to trade. Blockchain currencies are known for their sharp price fluctuations. Within a single day, the value of a cryptocurrency can change by tens of %, creating significant risks for both short-term and long-term investors. Unlike traditional financial markets, cryptocurrency exchanges can be insufficiently protected or even become the target of fraud. In addition, if an exchange goes bankrupt, investors may lose their funds entirely. The collapse of major cryptocurrency exchanges can cause major upheaval in the cryptocurrency market. An example is the collapse of the FTX exchange in 2022, which resulted in significant losses for investors and a sharp drop in the prices of major cryptocurrencies, including Bitcoin and Ethereum. The exchange, previously considered one of the largest and most reliable, was involved in financial fraud and found itself unable to fulfill its obligations to its customers. This case demonstrated the importance of asset diversification and the risks associated with holding funds on centralized exchanges. It is also worth considering that since cryptocurrencies are in a relatively new and constantly evolving legal field, changes in legislation may have a negative impact on their value. For example, a ban on the use of cryptocurrencies in certain countries could cause a market crash. And cryptocurrencies are also often used in illegal transactions, making them attractive to fraudsters and hackers. Investors can become victims of cyber attacks or scam projects. Trading stocks and bonds in the stock markets also has its own specific risks. These markets are subject to changes in economic and political conditions that can cause the value of stocks and other assets to fall. The specific risks associated with stock markets are not only the possibility of companies reducing or cancelling dividend payments, which can reduce the attractiveness of shares and lead to a drop in their price. Additional risks include the publication of bad reports, sanctions restrictions, asset freezes, and increased debt loads. Investing in corporate bonds also involves the risk of default by issuing companies. The human factor also plays an important role, as the management of companies has a significant impact on their success or failure. Ineffective management, including the aspects listed above, as well as corruption or internal conflicts, can have a negative impact on a company's share price. In order to protect yourself from risks in the financial markets, it is important to develop a comprehensive risk management strategy. First of all, you should diversify your investment portfolio by allocating capital between different assets and markets to reduce the impact of possible losses on the overall result. It is also recommended to use stop losses and limit orders to automatically limit losses in case of unfavorable changes in the market. Finally, regular monitoring of the economic and political situation, as well as constant training and improvement of your skills, will help you to be prepared for unexpected events and reduce the impact of negative factors on your trading account. When trading with leverage, it is important to carefully assess your options and not to risk funds that you cannot afford to lose. Strifor does not recommend trading on borrowed funds, as this entails serious financial risks. risks. However, we recommend that you always evaluate these risks based on your own financial capacity and do your own research when making trading decisions. Our employees are not authorized to give advice and recommendations on trading transactions and entry and exit prices. And all content released on this channel and other social media outlets is produced for informational purposes, not for advisory purposes. Also remember that emotions in trading can play a cruel joke on you. After a successful trade, you often feel euphoria, and after a losing trade, you feel stress. In such states, there is a high probability to make mistakes. If you feel a rush of adrenaline or irritation, it is better to stop. Close the platform, switch to something else, go for a walk, or do your hobby. Emotional control and the ability to stop in time are key skills for a successful trader. And to protect yourself from fraudulent risks, we recommend using the services of proven reliable brokers, such as Strifor. We remind you that we are members of the Financial Commission, an association that unites honest brokers and protects the rights of traders. Thanks to this cooperation, each of our clients is insured up to €20,000. Join Strifor, we always pay.